Hello, it's Saturday, the 20th of March 2010, and let's go ahead and take a look at these markets. I didn't have a chance to do it Friday afternoon, something came up, but let's take a look here. We had the market obviously down, so two down days in a row after 14 up days really isn't that bad, but we did see a little bit heavier selling, that is a little bit heavier volume, but it was options expiration day, so you have to take that in consideration that options expiration days are typically much heavier volume days to begin with. When we take a look at the intraday time frame, we can see here on the 10-minute time frame that the support that it held near that 116.60 area was broken early on Friday, and we did sell off pretty hard actually from there, but came down and basically right around that 116 level is where the market tried to find support, and you can see now we are below the 5-day moving average. The 5-day moving average is advancing, but the rate of ascent is slowing down in here. So early next week, we're going to want to see that if this rally can continue, and most likely, I think we're probably setting up for a little bit further consolidation, at least through time, and probably some more price pullback as well. But we do have lower highs and lower lows. Right now, the bigger level of potential resistance is going to be up at 116.60. That's the level that the market's going to have to get back above in order for the bulls to really take control once again. And as far as downside, where support should be found, well, we found it exactly. First at this prior high that became support. That level did hold near 116, and late in the day we had a little bit further pullback, and we can see that on the 1 minute time frame. A little bit further pullback that did bounce though, right from the level of this prior high on March 12th. So the market is adhering to these prior levels of resistance. So what we'll look for now is prior resistance and support levels to potentially continue to offer some support on the way down for this market. And right now, we could consider it in a short-term downtrend. So the benefit of the doubt right now, longer term still goes to the bulls, but intermediate term still you're turning a little bit more neutral. 115.20 and then 114.60 are the bigger levels that we're going to want to keep an eye on next week. And of course, we've got the 115.10 area that was basically the highs from January that will come into play, and we have seen the market bounce from there a couple weeks ago. So breaking back below that 115.10 level might provide the impetus for a little bit further selling, and you can see that's also where we're approximately going to find that rising trend line. So I would think that this week we're going to this coming week, that is, we're likely going to find this pullback come down to at least that 115.10 level and probably 114.60, and we'll see. We'll just have to see where it goes from there. But again, looking at the weekly time frame, the market impressively did make a higher high in the weekly time frame. So we're seeing that the pullbacks are becoming a little bit deeper on these weekly on the weekly time frame, but we're still in an overall uptrend. And looking at the 2007 highs to the 2009 lows, that 61.8% Fibonacci retracement, that is, here's 38.2. We've seen 50 taken out, and the next objective would be that 61.8% level, which is also the bigger support level that was broken back in September, October of 2008, that really led to the very quick selling. So you can see how quickly the market came down through that level and how many months it's taken to regain that. So the market's been clawing back, and still not up to that two-thirds retracement, but right now we're still in an uptrend, and we want to look at this market as kind of flashing a little bit of warning signals, I guess it would be the correct way to view it. On Friday, we did have the advanced decline line negative 2100 to 900, so 2147 declining stocks, 900 advancers. As far as the Nasdaq goes, the Nasdaq obviously, the weekly time frame still in a clear uptrend, looking like it's heading for these next potential levels of resistance, and perhaps even up towards $50 a share. But the market is gotten extended. It's been a heck of a rally here. The January highs are down at about $46.60. That would be a level that we would most likely expect to see tested this coming week if we're going to see a little bit further profit taking. And on the 30-minute time frame, you can see that we're struggling right with that 5-day moving average. The 47.50 level, you could consider it that it has held. I mean, we're at 47.49, and again, these levels are just areas. They're not meant to be so literal as $47.50. Although it obviously closed right pretty much at that level. Below that, we have 46.90 is our next level where the market's likely to decline to. We have that 5-day moving average flattened out here, so maybe we get a little bit of a rally and then a sell-off, but I think we have to be more defensive in here early next week and expect that we will, that it is likely we'll see further pullback. The trend is obviously still higher though, so don't be looking for the top or the end of the move. Looking at some of these trend lines we can draw on, you can see that what represents the essence of the trend is maybe these two, and they've been broken. Breaking the trend lines doesn't mean it's going to fall apart though, but more than likely that we'll probably head down and at least test these two levels here, just at about $47 and then $46.60 are our bigger areas. And if we break down through that level, then we would be looking at 46 here, and again, these aren't meant to be, we're not trying to look for round numbers, but this 46.40 45.90 rather would be where we would expect the market to come down to as well. And then we'd say, well, what else would be in that area? Well, that's approximately where this trend line will meet it as well. The Russell 2000 was down a little bit harder on a percentage basis. It lost 1.125% on Friday. We did, however, hold right at this above this level here, approximately $66.80. The little range from Wednesday and Thursday was broken. That is, this little support in here was broken. We got down through that, and this is again, you have to look at it since the event, and in all these markets we had this past week. What we've seen really is we've seen a big rally capped off by a little bit further strength based on an event. That event was the Federal Reserve, was the impetus for the move on Wednesday, Thursday, Wednesday and Thursday. I'm sorry, Tuesday and Tuesday and Wednesday really. So this is over those 4 days. Here's where the Federal Reserve reaction was basically to no change in policy. Since then, the average price has been 116.50. So since the event, this market has been sold off basically. The average participant who purchased the market on the S&P 500 and in the NASDAQ and in the Russell 2000, we can see is in a losing position now since the Federal Reserve announcement. So a lot of people viewed that Federal Reserve announcement as bullish and a reason for to buy stocks, when in fact right now 4 days later, 4 trading days later, the market has given up those gains, and the average participant after that is now in a losing position. So we can now kind of view it, somewhat as a sell on the news after a big rally, and that sets us up for further weakness. And here on the Russell 2000, again, this is our bigger, the 67 area is our bigger near-term level of what should be support. If that's broken, then we'll be looking down towards the 65.45 area, and then below the 65.45 is the highs from January at just about 65.50. So 65.55 and 65.45 and 64.80 really. So back to what I was saying is we've got this is this is what looks like a failed move now after the Federal Reserve. So that has to put us on a real defensive. What we'll be looking for is the 68 area to likely, if that is Monday, if we get some initial strength. 68 looks like a likely area for the market to find some resistance, and from there, further sell-offs would likely break us down through that 67 level and provide the maybe a little bit of fear or a rush to take profits that brings us down towards 65.50. I don't want to be sounding too bearish because we're still in an uptrend, but the uptrend is obviously run arguably a little too far too fast, and some pullback profit taking would actually be healthy for this market. So the semiconductors had been the real laggard. They started to catch up after that Federal Reserve, so we can take a look at what happened since then. The Federal Reserve, again, well, let's just put this on a 5-day context. Monday they were down, Tuesday they were up pretty big, and then the Federal Reserve came in. So these were obviously strong ahead of the Federal Reserve, but since that strength began 4 days ago, the average price of the semiconductors is $26.70, $26.67 actually. But we've seen this market now break down, and we've seen some support broken. So when we back that up and put it into perspective on a 30-minute time frame, let's actually do the 65-minute time frame. On the 65-minute time frame, when we put it into perspective, we do still have these higher lows, and those are what's really most important. We had seen a week and a half ago that the 2720 level was broken. That was getting us, giving us encouraging signs, and then we were thinking, well, if it broke below this 2650 level, then the semiconductors had the chance of leading the market lower. Instead, we had that strong rally that began on Tuesday, but since that strong rally began, that was 4 days ago, the average long participant is actually in a losing position. So if we see 2770-ish act as resistance early next week, that is this prior support and approximate 4-day volume weighted average price, then we'll want to be looking at this market as potentially breaking back below 2720 again. Another breakdown below 2720 would really put the semiconductors on the defensive again. Now the good news is the daily time frame doesn't look horrible. It looks like we should be able to find some support down near that 50-day moving average and prior support at 2650. That's really going to be the bigger level of interest for the semiconductors. So I think you have to look at these semiconductors as a real mixed bag right now. This group has been the laggard this year, and they continue to give us reason, the most reason for concern, I guess. The financials were capped off a strong week, but on Friday they did break down a little bit further. Not as bad, obviously as the semiconductors as the Russell, but right about the same percentage movement as the Russell and that, but again, the semiconductors are the only group that are still down for the year. Anyways, just back to the financials. We have a trend line here that is pretty obvious to see where we're at. What we had seen though Friday was we broke that first support level at $15.70. Our next bigger level is 1540. 1540. We can keep backing it up on different time frames and see the significance of 1540, and in particular, the daily time frame. We had seen that 1540 level had been resistance, obviously, for a period of about 7 months. We broke through that, so at least a test of 1540 looks pretty likely here, especially after such a strong rally off that rising 200-day moving average. So buying a breakout after that is buying a breakout past this high here. Generally the only people still buying are shorts that are getting stopped out. They'll run through that level and then begin a pullback. And the daily time frame, you look at this thing, it's still a beautiful uptrend. Just holding this rising 10-day moving average. So it's not a reason to look at this. There's nothing bearish about this market until you look at like this 10-minute time frame here. That's just starting to say, hey, we've got this slight pattern of lower highs and lower lows. We're at that 5-day moving moving average, 5-day moving average is flattening out. Maybe the next move is that we break this uptrend line here, and this uptrend line actually has been in existence since the beginning of this rally here that began in early February. So that trend line, is going to be something that is widely watched, and breaking that level then would likely lead to, I think, probably a quick move down to 1540. At 1540, then we'll want to see how this market really reacts. Will it bounce and then create a right shoulder? That's a possibility. We don't want to spend too much time theorizing about what may happen because let's just focus on this move right now, this leg lower. When it gets down to 1540, then we're going to want to see, do the buyers come in here and support this market? Does 1540 in fact become support, or maybe it just drops right through it, and this rally is just done? I mean, that's not usually the way it happens, but that would be where we want to monitor to the activity very closely again and see what the market's telling us. So for now, we've got this trend line that we can see here more clearly on the 10-minute time frame, but is also existent on the longer term, month and a half basis. So, move down towards 1540. That is the big level in the financials. If you're going to trade the short side, this is where a lot of people will be covering their shorts. A lot of people will be looking to nibble, and it's most likely an area to find support. Doesn't mean it will, but that's just what's most likely. Subscribers, the only stock we have open right now is Trimble Navigation. Trimble we had gotten involved in at $26.20, and we still have a half a position in there. We got involved at $27.20 on this day right here. We had gotten out of half of it at $28.70 on Friday, and we have half a position open with a stop at $28.20. There will be a subscriber webinar this Monday, so I will be putting up a link for that on the site as well. Hope everyone has a good weekend.